Morning, everybody. Welcome to the latest edition of Talking Ball. It's the 18th of October. I'm Joe, joined by Steve and Taff this morning. Good morning, gentlemen.
Morning.
Hello,
Mate.
Joe. Morning.
How are you both doing?
Yeah,
Good,
not
man.
too bad, mate. And you're with us. You're not here.
No, not here.
You're supposed to be in
just
Dubai.
Supposed to be in Dubai, yeah, but the protesters on the M25 Dartford Bridge put an end to that. So they're still up there. Good luck to them. But yeah, a bit disappointing. But you know, I get to do this, so every
Yeah,
cloud, right?
exactly.
Yeah.
Get to
Stuck
spend
with
my
us,
morning with
man.
you guys. Yeah, it's all good. Okay, plenty going on in the markets anyway, so we can get stuck into the latest headlines to start the day. So we had the New York Empire Index retreat yesterday. The manufacturing survey dipped to minus 9.1 for October from a reading of minus 1.5 in the previous month. This was below the consensus forecast of minus 4. Small increase in the employment, while inflation data was mixed with a faster rate of increase in costs, but prices received a slightly slower rate. Received at a slightly slower rate. The US 10-year yields tested 4% again. The Treasuries briefly gained ground on Monday as US yields retreated, but there was a reversal later in the day, testing the 4% level yet again, but failed to close above this level and traded just below this level on Tuesday. The news coming out of the UK continues to come thick and fast. Remarkable UK budget U-turn continues. New UK Chancellor Jeremy Hunt stated on Monday that nearly all of the tax measures put in place from the September fiscal statement will be scrapped, with only the reversal in the national insurance increases and cut in stamp duty remaining as legislation, as that is already underway. He also stated that there would be a review of the energy support package in April, which was due to come into place with the aim of cutting that cost into the Treasury. UK yields declined off the back of this, so they do appear to have stabilised the markets to some extent. And we'll wait and see what else comes from that in the coming days. Equities posted a pretty significant rally across the board. Further to the reversal in the UK policy and budget statements helped underpin global risk asset appetite during Monday, and Wall Street equities posted significant gains with a positive reception to earnings data as well, which is underway. That's kind of got under the radar a little bit with everything else that's going on. And we saw NASDAQ post gains of over 3% on the session. In terms of central banks, the Canadian or the Bank of Canada, the business expectation surveys reported a softening in business conditions, with most companies now expecting recession. So there was a warning there from the Bank of Canada that they do expect weaker growth conditions going forward. So that's it for the latest headlines. Let's take a look at some charts, shall we? Steve, do you want to kick us off, or Taff, who wants to kick us off today?
I think Taff's going to go ahead with Bitcoin and commodities, and then I'll dive into indices.
All right, let's do that.
Let me share my screen and not leave. Okay, yeah. Right. So let me kick it off with the commodities. I'll start off with oil, with crude oil. We had a really bearish candle last week on the weekly chart. We had a really bearish candle, and that could really signify probably further bearish drive. But on the daily here, it's interesting to see that we've got this level here. I think I talked about this level some time ago. This 87.14 to 87.70. It held up a bit on Thursday last week, and price then just came crashing through it on Friday, and we seem to have tested it yesterday. So let's see what that looks like on an intraday level. Just move that. So on an intraday level, so my first resistance, what price is looking at today is there's the first resistance, which is that level that I shaded there, that the 87.14 to 87.70. I'm on an intraday level. This is obviously bearish. This is a lower high, so I'm expecting probably this trend of lower highs to continue. I'd want to see price come test this zone here, and from there possibly take a shot to target probably the first support and go to the second support. If you look closely on this first support, it's really your 50% fib retracement level for this impulse here from from here to 93.46. So from 76.31 to around 93.50 there. So that's the 50% retracement. So the price seems to have held that up, but really what I'm looking for is action between the first resistance here. I think if price goes up and gets rejected, then it'll come down. Or alternatively, what could happen is price could just break this 50% fib, go to the second support, and then from here I think the bulls will come and pick it up again to take it up. So those are the resistances and supports that I'm looking at for crude oil. Let's go to gold. Again, gold, as with other commodities, we had a really nasty looking bearish candle for the weekly on the weekly chart, and then again you can see the shaded area here. This area that I shaded, it really it is providing some sort of resistance. The price broke it here, and then we tested it. We couldn't go further. I think on Wednesday we tested it with a bullish candle, but we couldn't go further. Price rejected it, and then on Friday we had another bearish candle here. Let's try and just expand and see what that looks like on an intraday basis. So I think this was my gun to the head here. Just left it there as a souvenir.
Yay.
Yeah. All right, I can remove that now. Right. Right. So the resistance that I talked about that I shaded is 1672 to 1680. This is like your money spot here. The ultimate support that I'll be targeting for the bearish move would be 1615 to 1621. So today what I would envisage price to do is probably come up, test the second resistance here, and then on rejection we come back down again, take some off on the first support at 1641, and then ultimately the ultimate target is the yellow zone here, 1621 to 1615. You can see I put a trend line here, a dashed trend line here. This is it's fairly a weak one, but it could hold. It's a fairly weak trend line here, but it could hold. If it does hold, then we could possibly just see price not overcoming the first resistance that I put here, which is 1661. So if it holds, then we could probably just have a downfall from here and break the first support, go all the way to second support. Alternatively, for the bulls, price could come back here on the first support 1640, test it again, and then reject it with bullish momentum, and then price could go up to the first resistance 1661, and then ultimately probably target the second resistance, which is 1672 to 1680 thereabouts there. But my overall bias on gold is to continue the bearish momentum that we're seeing here from the top of the channel boundary here. So that's on gold. Let's go to natural gas. Natural gas is an interesting one because I had a support that this trend line here that I thought was going to hold, but the market proved me wrong. So I talked about this trend line here. It held here in January, all these multiple times, and we were seeing this cluster of price here, just clustering here. We had this bullish candle on Thursday last week, and I thought this was going to continue, and I thought we're going to have bullish momentum at least to test the purple zone here, but that was not to be. Let's see what that looks like on the intraday. So if you remember, I put this head and shoulders, and actually we did test the boundary here, and we had good momentum. But I'd put this weak, well, I thought it was weak resistance at 6.80, and price came up. It just couldn't overcome that, and then it started trickling down, and then finally broke the major trend line support here. So on break of that, this is where price is currently skirting. So that invalidates this formation. On break of that, it means this inverse head and shoulders really is not valid anymore. So what we're now looking at is probably continuation of the bearish momentum. But what I would look at today is resistance at 6.50. This would be the money spot resistance at 6.50, and the trend line here. So this space here, if price comes here and just test this space here, I'll be looking to take any rejection or signs of rejection for continuation downward. And then alternatively, on the bullish side, we have a support level here from the 6 level to around 6.03 level. This could be quite a significant support on an intraday basis. So if price just doesn't go up, if it just continues to go down, I expect the bulls to come and just give a bit of momentum for price here. So for any longs, I'll be looking to take longs around this zone, and then for any shorts, I'll be looking to take shorts around this area here between the resistance and that trend line. That's for natural gas. Let's see what happened with Bitcoin. Oops. Let's see what happened with Bitcoin. Let's just go on the daily. So I spoke about this trend line that was respected. Well, we touched it here on Wednesday, the 20th September, and then we touched it here. And then I spoke about how we thought that this dodgy candle here meant that we're going to have a reversal and bullish momentum was going to come, but that didn't happen. Price broke the trend line here, and then we have a level. I think it's 19029, which price just can't seem to have a close below on the daily. So this is quite a significant level here, and it seems as if price was capping there, and then we now had bullish momentum starting from or Friday. Price was kept by that support, and then Sunday, because obviously it's a cryptocurrency, so it trades 24/7. Sunday we had this bullish candle here, and then yesterday on Monday we had another bullish candle. So we seem to be having another bullish candle, but note the resistance that is coming in the form of this reverse. It's a trend line support, but then now it becomes resistance. Let's see what it looks like on the intraday level. So on an intraday level, that you can see that trend line here. This is probably where price is heading, but there's a confluence here. We have a major resistance, intermediate resistance coming across, and then we've got this trend line resistance as well coming here. So it'll be pretty difficult for price to cross this. It might cross it, but then it needs a lot of momentum. But if I was going to short Bitcoin, I'd wait for price to come here, and this is obviously an area of interest. I'd wait for price to come here. Upon rejection, then I would take a short. This level zone here is 19835 to around 19940. My first resistance there. This would be probably my money spot. If it comes there, then I take some off at my first support, which is 19309, and then ultimately the ultimate target will be around 19029 on an intraday basis. This is for the bearish buyers. For the bullish buyers, I would wait for price to come and test the first support, which is 19309, and then on rejection, then I'll take a trade and probably target my resistance zone here. And if it breaks right through here, then the ultimate price level would be 19029 for the bulls, and then obviously target the ultimate resistance, which is this zone here, 19940 and 19835. So that's my view on Bitcoin, but I'm mildly bearish here. I'm looking for price to just not pass this confluence zone, this confluence resistance here. So if it's capped, then I'm looking to take shorts to the downside. All right, thank you, gents.
Cool, nice one, Taf. Steve, what do you want to do
Thanks, Taf.
next? Should we do indices or FX?
Let's do the indices, shall we?
Okay.
And we'll look at to start with. I'll look at DAX. Now, you know, I'm a big bad bear, and I'm always looking for selling opportunities. But at the moment, they're deserting me, and my gun-to-head trade idea from yesterday proved that. We've got a big downward resistance line, which has got 3 really nice points, and probably looking for a fourth. And this rally here on this is a weekly chart. We've got inverted hammers here, which are bearish candles. We talked about this last week. And so momentum yesterday really strong from the get-go, from Monday morning, opened low and just one-way traffic. A bit of a Marabuzo candle on the weekly chart, and also yesterday on the daily chart, very similar, completely engulfing Friday's price action and taking out the highs as well. We're above resistance now at 12,700, so that will act as a little bit of support. And already today we've projected a bit higher, got up to 12,833. So we are seeing a nice little correction, and this has potential to continue. As I say, looking to buy dips maybe around about the 12,700 or lower, targeting maybe a 61.8, which comes in at 12,895. The 13,000 level, quite a psychological level. So yeah, really like that. Support below the 12,700 comes in around about 12,355, which is the basically yesterday's low. I think is that right? Yeah, 12,368 yesterday's low. So looking quite positive on DAX at the moment. On the hourly chart, I suppose we are seeing signs of a little bit of a topping formation, but we've seen this a number of times, so it just looks like it's going up. Getting dips are being bought, and there's demand for it at the moment. Take a look at FTSE, very two-way over the last month. We saw that obviously the negative sentiment with everything going on with the UK government in all sorts of trouble, and it looks like that the amazing Liz Truss may have put a stem to all the problems, and she'll sort it out maybe by throwing herself on the sword in the next couple of weeks, I suppose. But we've basically, although we took out this support at 6,809 from last week, we've managed to really sort of stave off that bearishness, and really we need a close below that on a weekly basis for further downside, and we're looking at potential for double treble top really. So really quite interesting numbers where the FTSE really struggles sometimes to be interesting. On the daily chart, we posted a bullish hammer. That was the turnaround Thursday, the inverted hammer, then the engulfing candle, and then the continuation today. So really looking decent from the a bullish perspective again. Also, similar sort of price action in the Dow Jones. We talked about this last couple of weeks. Actually, the inverted hammers are signs that the trend is coming to an end, and it certainly has, with a bit of aggression yesterday. Monday's price action, again, that Marabuzo type candle where it just has no real tail. It's just a full recovery of Friday's price action. Broke above the resistance at 30,450. That is a double bottom confirmed. Let me just put a little old arrow in there. That arrow doesn't look very, I don't like the color of that. So let's get another one here. So there's a double bottom formation. The neckline we've broken above. Neckline comes in at 30,457. Potential for a close above there, that would be significant, and a further upside wouldn't be a surprise then. Let's take a look and see where we can get some Fibonacci lines from. So we've got 38.2% fib coming in around about just above where today's high is, and 61.8 up at 32,110. So definitely on the front foot, more so maybe than the Nasdaq as well. Nasdaq, obviously the tech stocks have been impacted. This is the sort of level that the Nasdaq equates to, and it's miles away from there at the moment. Well, miles away, it's like 430 odd points away. It's probably a decent rally away. But the bullish hammer on the Nasdaq, obviously. Then we got the turnaround, the bearish engulfing candle. But then we had the Marabuzo candle yesterday, which has basically taken out now the resistance at 12,000. Sorry, 11,200. 12,000, 11,200. And maybe that's a level to give the bulls a bit more confidence to see more upside. Similarly, S&Ps, the level really of resistance to targets up above 3,800. We had the bullish hammer, the bearish engulfing, and then the Marabuzo candle, and now the break above resistance that we've seen, 3,727, just trading around there now. So yeah, the momentum seems pretty strong. Obviously, with what's going on in the world, this could turn on a sixpence. But at the moment, from a technical perspective, it's looking quite bright, and further upside expected on the indices I don't really like saying that, but I just had to.
You feel you had to say that through gritted teeth.
It is. Can you tell? It's horrible. I hate it.
On the
But
single stock side of things, there was a few gap ups this morning by the looks of things already. So further positive follow through this morning on a few stocks, certainly in the UK, and earnings season underway as well. We've got some big names later today, which we'll touch on in a bit. So that may give the markets a little bit of impetus. Thank you, Steve, for your update on the indices.
That's good.
Was that everything?
Yeah, that's it. Yeah, pretty much.
All right, perfect. Let's take a look at FX then. So starting off with the dollar index, this is the daily chart, still obviously in a decent upward trend. But if we zoom into the latest kind of price action on the dollar index, we can see that yesterday, not quite an engulfing candle, because it didn't engulf all of the previous day's gains, but certainly quite a fair amount of coverage from that candle yesterday, and closed at the lowest price that we've seen really for a couple of weeks, going back to the 6th of October. So under a little bit of pressure. It looks as though it may be in the situation where we're seeing a bit of consolidation in price, maybe a bit of rounding formation underway at the moment. But in terms of support, we're looking really for a retest of this level at 110.27. So even if it does get down to that level, we've still got the persistent uptrend in place. So any pullback to here is still likely to present decent buying opportunities, unless we do form some sort of top. Obviously, we could argue, like the inverse of what we've just seen on the US indices, that maybe this is forming a double top pattern, this being the first top, this being second. In order to complete that pattern, we need to see this low at 110.05 taken out. And then maybe we could see a deeper correction on the dollar index. But for now, I'm still happy to stick with the bullish side for the time being. Looking at euro US dollar, this is still trading in a well-defined bearish channel. No immediate signs of that slowing down or stopping or reversing. Again, potential for a double bottom here if we can take out the highs that we posted on the 4th of October, which come in at pretty much parity. So if we can get back above those levels, then maybe there is some evidence that we'll see a push to the upside. In terms of what's going on the intraday basis, let's just take a quick look here. I did line that up as a gun to the head trade, but looks like I've lost out on that one already, with it moving too favorably towards my target already. But this is a short-term setup on the fibs. So we've got 61.8% fib level that we're into at the moment at 98.59. Above that, 78.6 and 99.20. We've also got a horizontal line that I've highlighted here at 98.55. So we've rallied into that this morning. Over the last 26 minutes, we've posted what looks to be a bearish outside candle. Still very early, still a long way to go. Another 34 minutes before we can get too excited about that. But it's quite a strong reversal actually on that. But it looks as though we've got some sort of range formation here. So any pullback may find some support at these levels at 98.16 and 97.99. And if these levels continue to hold, then that may offer some bullishness to the beaten up bulls that are looking for a bounce on this. So into this kind of region here, we may see some buying activity. I think we need to, if we have we got any hope of euro USD bouncing. But euro seems to be on the front foot a bit at the moment. If we take a look at euro sterling, let's just go back to the daily quickly. We can see price action has been pretty choppy and messy with this, as you'd expect with what's going on in the UK at the minute. So not really much I can gain from that at the moment. We did have a major support in at 87.17, but we're well below that at the minute, and chopping around quite a bit. Where we are making new highs is on euro yen. Actually, this is breaking out to new highs yesterday. A big impulsive candle through that 145.63 and showing no signs of slowing down. Let's just take a look at sterling versus the US dollar. As we can see, still trading in a bearish channel. Potential for a double bottom, although the ranges on this are pretty extraordinary given the intervention that we saw from the Bank of England and obviously the mess up from the mini budget. But in the last few days, as the government have started to unwind that budget, we have seen a little bit of strength, but we've rallied into resistance at 114.10. And struggling to overcome that at the moment. If we can break above this 114.95 level, then that would indicate that we've put in place a double bottom pattern, and maybe we can start looking for higher prices in the short to medium term. But we do encounter some resistances just above that at 115.96, then again at 117.63. Let's take a quick look at the intradays on this to see if there's anything of interest. So I've got a couple of support and resistance lines drawn on this on the hourly chart. So we had a resistance there at 114.30. Which did a pretty good job at stopping the upside advances. Above that, we've got these highs from back here on the 5th of October, which come in at 114.90. Interestingly, on this chart, we do have an unfilled gap, which comes in at 111.86. That was produced between Friday and Monday this week. So a pullback into that level to retest and fill that gap cannot be ruled out. That was what I was looking at as a gun to the head trade. But I'm going to have to revisit that because the risk reward now is no longer favorable. Think that will do. Let's have a quick look at dollar yen. That continues to make new highs and showing absolutely no signs of slowing. So I think, Steve, you said yesterday on the video there was 9 consecutive days. So we're into a 10th now potentially with this of positivity. You don't often see rallies of that magnitude persist for that long, but you know, maybe you will in this instance. I certainly don't want to be calling the top on this anytime soon. So
they're not doing anything. The Japanese guy, they're not
no
intervening.
intervention.
So yeah.
No. So
So as long
150
as that
very much
stays,
on
then
the cards then, I would have said. Big round
yeah.
number to target, not too far away from it. So if you are long and holding, congratulations for doing that because you've absolutely had it off. But 150 looks like an interesting level maybe to think about lightening up as it's a big psychological level. But you know, certainly the trend remains bullish and no signs of it slowing. Okay, that'll do for the FX side of things then. So let's move on to the gun to the head challenge. All three of us on the video today. Yesterday it was just Steve, and you traded DAX, if I'm not mistaken.
Yeah, you don't need to show it, but if you need to show it, I'm reversing my idea today. I'm actually going to look like I've got egg on my face after today's session. I guarantee it.
Okay, well, just a quick recap on what the gun to the head trade is for anybody new watching. So we pick live trade ideas on the video in the hope that they play out between now and 9 o'clock this evening. That's when we'll close them out and take wherever they're at and log it down in our spreadsheet. Of course, the trades will be closed earlier if they hit their stops or their targets. All of the ideas that we publish must have a risk reward ratio in excess of 2 to 1. And all of these ideas are placed at market and published straight away to our TradingView channel. So if anybody wants to check those out, you'll see a list of previous ideas on here, all time-stamped, all marked out, nothing to hide, just a bit of fun. So if you want to follow them or even copy them, please be careful if you do. But yeah, it is just a bit of fun, so keep that in mind. So Steve, you were looking for a short-term reversal in the DAX yesterday, and it didn't play out, sadly. There was a lot of appetite for risk yesterday, so prices moved higher and moved considerably higher, which is, you know, again, highlighting the importance of a stop on these trades, because if you hadn't had a stop on that, it'd still be you know, going against you, and you'd be in a lot of pain now. So that is the game. Keep your stops tight and look for big rewards, and that's what we're going to continue to do today. Who's got an idea ready?
Me.
I've got one already. Go
on then, Steve.
You.
I stole it because I'm just like, it's going to, I can feel it running away from me. So I'm buying DAX. I'm really tight stop. Only like, we're talking about like a, what is that, 70 tick stop? Looking for a 210 point rally up to 13,000. I think I'm just going to go with the flow. I've tried to fight this for far too long.
That is capitulation from Steve, everybody. So
yeah,
that is
so
top
it's
in.
the reverse indicator.
Yeah.
So yeah, going to go long on this, buying at these levels. What's the reasons? The reasons are inverted hammers on the weekly chart and strong momentum on short-term breaking resistance. That's about as much as I can come up with on these levels. So buying at 12.7917, targeting 13,000 just above there, and the stop is at 12,721.7. So risk reward of 3 to 1.
Lovely.
Or risk reward of 0.33, whatever you want to say.
Okay. Right, Taff, what you got, mate?
All right, so I'm gonna go with Bitcoin. Ideally, I would have wanted to short Bitcoin around this zone here, but this is a gun to the head. So I'm going to short it, and then if you try and connect here, you You can see there's a trend line here with one touch there, and we're possibly touching the second time. So I'll short it, but then let me just go to the 30 minutes so that we can see clearly. All right. So on the backdrop of that, I think I'll get in at market here. I'll put my stop above this this trend line here, this wedge type of thing, and then this well, it's actually two trend lines really. The first one is just validated once, and then the second one we've got 2 hits, I think. So I'll put my stop above here, and then I'll target the first support, and it's a 2.95 risk to reward, and yeah, we'll see how that goes. So I'm shorting Bitcoin at market. My profit is 19,314, and my stop loss is at 19,748. So that's a 2.95 risk to reward ratio. Let's see how that goes.
Good luck, Taff.
Yeah.
Jamie's watching this morning. Steve, did you see that?
Yeah.
Oh, I've got a new reverse indicator. Morning, Jamie. Hope you're doing good.
You little bugger.
Okay, I'm going to take a look at New Zealand dollar versus the US dollar. So if we believe that the markets are going to continue to move higher, certainly on the equities, and we're going to see a move into riskier assets, then I think New Zealand dollar is one that should be considered. Obviously, it's a riskier one of the riskier FX pairs. Obviously heavily linked to commodities, and if you do get any dashes to riskier assets, certainly in the FX space, you do see it kind of happen with things like New Zealand dollar and the Aussie dollar. So this is the daily chart. Clearly the overall trend is pretty horrible, and you'd expect that because we've obviously seen such huge strength in the dollar index. But if we look at this on a very short-term basis, looking at the daily chart, we can see we are moving above the 10-period exponential moving average today, which for me is often a nice little indicator to use to suggest that we're going to see a shift in momentum. Obviously, I don't expect the overall trend to reverse anytime soon, so this is very much a short-term trade. But if we look at the intraday charts, so going to the hourly here, looks like we may have formed or in the process of forming some kind of short-term bottom here. Sorry for the very crude drawing there, but looks to me like we may be ready for a bit of a move to the upside. Over the last few hours or so, we formed this kind of bottom pattern here. We've taken out this resistance at 56.80, and we've just seen a nice little pullback into that level. So I'm going to try and speculate on that holding and for a fresh push to the upside into these previous highs here that we posted on the 6th of October. So that's at 58.05. Let's get a nice tight stop in there at 56.45. Giving me a risk reward ratio of 3.24 R on New Zealand dollar versus the US dollar. So looking for a bit more dollar weakness and maybe a bit more appetite for risk out there in the FX space. So let's see how that goes.
Good luck, mate.
Okay, data-wise today, let's take a quick look at what we've got. We have the German ZEW index, which is due out at 10 a.m. UK time, and then tomorrow morning we have the UK consumer prices. So that'll be the latest read on inflation in the UK. Obviously, another important economic indicator for the government to consider with their overall plan on how they're going to stimulate and grow the economy. Later in the week, we've got the Australian employment report that's due out in 2 days' time, so due out on Thursday. But we are underway with earnings season in the US, which has really taken a bit of a backseat over the last few weeks or so, just because there's been a lot more important stuff going on. So earnings back in focus. We've got Goldman Sachs, Johnson & Johnson, and Netflix all reporting today. So keep your eyes peeled for those. If you've got any exposure to those stocks, do be aware that we are expecting an increase in volatility as a result. Okay, anything further to add, gents?
No, all good here.
No.
Lovely. Okay, well, let's get this wrapped up then. I hope everybody has a fantastic day, and we will be back tomorrow morning.
Cheers.
Have a good
Bye,
day.
everyone.
Bye.